Welcome to the Pring April quarterly newsletter. This quarter's report is entitled Higher Still, but Cyclical Clock is Still Advancing. Another quarter, another new benchmark high for the typical Pring client. Given all the negative headline events during the quarter, stocks held up better than we expected, with only a 7% intra-quarter decline, and it finished on a strong note. As it turned out, we took a more defensive posture than the market outcome warranted. As always, our number one priority is to protect wealth first, and we leaned on the side of caution. These actions somewhat tempered returns, but you can say your portfolio has reached new highs in 10 out of the last 12 calendar years. Last month also marked the 2-year anniversary of the end of the worst bear market for stocks since the 1930s. Looking back 2 years ago, headlines and economic news were as bleak and black as possible. In fact, the economic slump was so deep and lengthy it was tagged the Great Recession. At the time, many wondered if the economy and stock market would ever recover. We held a completely different and more optimistic view based upon our historical research of financial cycle behavior. The lesson for investors is the bottom for the stock market is, by definition, the point of maximum pessimism. In the face of that pessimism, the stock market abruptly reversed directions and began a strong 2-year advance. All in all, the markets and your portfolio have come a long way. The reward for sticking with your investment plan is you have now enjoyed 2 solid years of growth. Today, the typical Pring client sits comfortably at new highs in wealth. Better yet, we expect even higher highs in your wealth this year. Pring continuously gauges market opportunity and risk through 3 different time frames. We realize it can sometimes be confusing separating our views through these different lenses. So in this client letter, let us clarify our viewpoint for each. The intermediate, which is 2 to 6 months, the cyclical, which is 4 to 5 years, and the secular, or very long term, that can last 15 to 25 years. Our intermediate market view is improving, and we are acting to take advantage of further upside potential over the next few months. However, 2 years into this cyclical bull market, common sense tells us we are in the latter stages of this market advance. Pring financial market barometers continue to indicate we are in stage 4, confirming the late stages of the current cyclical bull market for stocks. Our proprietary research of business cycle history identify that late-stage sector winners tend to be inflation-sensitive, energy, metals, and industrial stocks, plus healthcare companies. Your portfolio is heavily populated with these favored themes. On a secular basis, we still believe we are only halfway through this secular bear market for stocks. The debt, budget, and stock overvalue issues are big long-term concerns that would continue to be headwinds for us in the decade ahead. How much longer this cyclical bull market continues depends on a number of factors we are closely monitoring. One development causing us increasing concern is the Federal Reserve's easy money policy that will likely unleash a destructive inflationary spiral. The Fed's unprecedented experiment of buying massive amounts of Treasury bonds, so-called quant easing 1 and 2, is designed to keep interest rates artificially low and will ultimately lead to damaging inflation and other unintended consequences. Rising inflation levels will also bring higher and higher interest rates. These 2 unwelcome events will probably trigger the end of this cyclical bull market, as they have in the past. Our experience managing portfolios in the inflationary 1970s has seasoned us for the challenging conditions we expect to face. Be assured, we understand the risks and have a well-thought-out strategy to navigate through this demanding environment. Pring first priority has always been to provide you positive portfolio returns with limited downside risk and volatility. We are proud to say we have delivered on that priority over our entire 34-year history. Protecting portfolios through the inevitable bad periods is the key to your hitting new high levels of wealth so soon after a bear market period ends. We are continuously energized to improve on our work and seek mastery in every facet of the firm. The Pring Turner team is working hard to improve skill sets and tools that deepen our understanding of the business cycles and financial market behavior. Our ongoing mission is to deliver even better returns with less risk in the future. We are excited about the progress we continue to make and are confident as we face any challenges ahead. Thank you for your continued confidence and entrusting your valuable assets to Pring Turner Capital Group.